what is the simplest way you can explain to someone who probably doesn't know anything about this, what this vehicle is? And then let's continue talking about the benefits and how I use my policies and how I plan to use my policies in the future and those types of things.
So
big task, because it is somewhat of a complicated strategy, right? But
yeah. Well, I think the easiest way that most people get it, especially in the real estate world, is like term insurance is like renting, permanent insurance is like owning. And so cash value life insurance is the most efficient way to own permanent life insurance to drive the efficiency of building the equity that you would have in your home in a permanent life insurance policy. So again, in term being renting, you rent coverage for 10, 20, 30 years. At the end of term insurance, you have nothing to show for it, right? It's like you've rented a house for 20 years and then you're like, okay, now what do I do? But for life insurance, that's a good thing because you haven't died, right? And that's one of the reasons why insurance companies make so much money is that term insurance is super profitable. 3% of people die during that term. The other 97%, right, is just pure profit. And whereas permanent life insurance, when you own that asset, you've got the ability to tap into the equity of that home, just like a HELOC. You can pull cash out of these permanent life insurance policies, and you can do it on a tax favored basis. And so more into the weeds, we can get in that later on, but the easiest way to think about it is, right, cool, you can borrow tax free from the equity inside that permanent policy. And at the end of the day, there will still be an asset there in the form of permanent death benefit. It may not be quite as big if you've pulled all the equity out. But that's the easiest way to think about it is you're owning an asset, you're not renting it. And we're not using this for the permanent death benefit. Almost all of our clients are self-insured at some point. Some get self-insured really quickly. Some it's the traditional maybe 55 to 65. They're self-insured.
How are you defining self-insured? Just so we're clear on that.
Great question. They've got enough assets where if they died, their family and multiple generations will be just fine with what they're leaving behind. Whether it's real estate, stocks, bonds, a company, they are self-insured saying, cool, if I don't make it home tonight, my family and generations are still going to be okay. Right. And so that's the way I would frame it.
All right. So let me play this back just so we make sure we got this right. So I buy this thing, and we're calling this thing, this cash value life insurance. I buy this policy, and similar to a payment on a mortgage, where part of that payment goes towards interest and part of that payment goes towards the principal. Similar to that, part of my payment for this thing, this monthly payment called cash value life insurance, is going towards equity, right? Some of it is going towards equity, and you can correct this if you want to adjust how I'm saying it, but like part of it's going towards equity, and then part of it is going towards paying a premium for actual real life insurance, so that if I die, my heirs get X dollar benefit, right? So I am kind of combining these two things, and I pay into that. It's just like a mortgage. I pay every month, and over time, I'm building the equity in this policy. And just like equity in a house, I can go to this, you're with Northwestern Mutual. So I can go to Northwestern Mutual and I can say, hey guys, like I've been paying into this policy for 3 years, and now I want to take a loan against the equity I have. And that loan is easy to get. It's instant. I mean, not instant, but it's quick. It's easy. I can access that cash, and then I can use that cash for whatever I want to use it for. Same as like you're saying, it's like a HELOC. How close am I to kind of how it works?
Yeah, very, very close. You're in it to win it. To your point, like there's the death benefit component. It is a permanent life insurance policy. And so your premiums are going towards purchasing a bit of life insurance. And depending on the size of the policy, right, they could be going towards more life insurance or less. But this is where how structuring and funding the policy correctly makes a very big difference. but that those premium payments that aren't covering the cost of insurance are building equity, and they are accumulating. If we're talking about the strategy that most of our clients like you in real estate have, that equity is not exposed to like the S&P 500. It's not exposed to the market, the ups and downs. There are types of policies like that. But most want to say, I want an asset that is safe. It's my sleep good at night, my cash alternative that can safely grow each year, no matter what the economic environment is. I know that it will grow. And if I need access to it, yes, you can get it quickly. Within 2 or 3 days, the money can be zipped back into your Wells Fargo or Bank of America account, and you can do whatever you want.
And that's a good point too. So it's not just that I'm paying into this equity. It's that equity. So again, I have that payment. Part of it's going towards one thing. Part of that equity is actually growing, and it is growing at a base percentage that is, for all practical purposes, guaranteed. Like unless Northwestern Mutual went bankrupt tomorrow, which is like they have like billions and billions of dollars worth of assets, right? That would be like crazy.
Yeah.
So that's that additional benefit. It's like, I'm not just paying it into it. And almost like a house appreciates, right? So I'm getting appreciation on this asset as well.
Yeah. And actually, I mean, that's one of the unique things about insurance products is that there is an actual guarantee, and all guarantees are only as good as the company that they're backed by.
Yes.
So these policies for mutually held companies, they have a guaranteed column. And then there is the current dividend interest rate column that says, wow, the company being mutually held, when they have profits by law, they have to send those profits back to the owners, which are the policy owners, in the form of dividends. And that's getting a little bit more in the weeds, but it ultimately says, well, yeah, if the company does better than they expected, then on top of the guarantee, there is that dividend interest rate that's being paid. And so this is when, out of all the different companies in the world that you can buy from, there's a handful that are AAA rated by all agencies. And to your point of saying like, hey, if things did get really bad, and we've chatted about this before about the apocalypse type of mentality, is that
there's people out there thinking about that,
right? If the banking system just failed, well, hey, here's another layer, you actually also do have creditor protection from. Every state has a different level of creditor protection, but cash value life insurance is like creditor and predator protected. In case somebody's coming after you, that's cash that can't be touched.
Explain a little bit more about that. Why it's not touchable through a lawsuit is what you're saying, correct?
That's right. So life insurance.
I have $400,000 sitting in this cash value life insurance. I'm still paying into it every month. Someone sues me because they slipped and fell at my real estate property. Like obviously, anybody listening to this should be using LLCs and protecting themselves. But let's just say you get pulled into this. Explain to us a little bit about why or how it's not penetratable through a lawsuit.
Yeah. So life insurance exists to protect families and businesses. First and foremost, the death benefit component. And so that death benefit is tax-free. So there's a handful of tax advantages, and that the IRS and the federal government want for life insurance so that families and businesses can have extra layers of protection. So not only is the death benefit tax-free, that cash value, the equity inside the policies grows on a tax-deferred basis. So it grows without the impact of tax, just like the equity in your home is. But every state has a different level of creditor protection that they allow for. So, I'm sure you got folks listening to this all over the country. You can check your state for that amount of creditor protection, but like the state of North Carolina has cash value creditor protection of $1 million. So that's a nice, that's why a lot of car dealerships, folks in real estate, commercial real estate, and construction will say, "Oh, great! I know that I've also got $1 million of creditor protection on these dollars."
And just so I'm really clear, that just basically means like no one can touch it below $1 million. No one can touch it because that's the state's rule. That's the state's law.
That's right.